Welcome to your ultimate pit stop Piston Pundit. Canada and China are locked in a high-stakes trade standoff that began with EV tariffs and now spans multiple sectors. This escalating conflict is reshaping industries, affecting everything from automotive manufacturing to agriculture. It's more than a typical trade dispute. Consumer prices and economic stability are on the line. In this video, we'll break down the 7 key factors driving this trade war and analyze how it's impacting Canada's economy. Stay tuned for the full breakdown. Factor number 7, Canada's EV tariffs, a risky play or a strategic move. Canada's decision to impose a 100% tariff on Chinese electric vehicles sparked a trade war, drastically shifting relations between the two nations. The Trudeau administration defended the move, accusing China of dumping EVs at unfairly low prices, undermining Canadian manufacturers. While this aims to protect domestic industries, it raises environmental and ethical concerns over China's labor laws and regulations. With Canada's EV market projected to hit $100 billion by 2026, this decision risks making EVs less affordable, potentially slowing the country's green energy transition. Is Canada safeguarding its future or jeopardizing its role in the EV revolution? Factor number 6, China's Canola counterattack, a strategic strike. China swiftly retaliated by targeting Canada's agricultural sector, launching an anti-dumping investigation into Canadian canola exports, which make up over 50% of Canada's canola sales. Beijing accused Canada of selling at unfairly low prices, a serious threat to the country's canola industry. As a result, canola futures dropped 7%, while rapeseed prices surged by 6%. With Canadian canola imports to China up 170% year-on-year, the situation is dire. Farmers fear that losing access to the Chinese market could have long-lasting effects, and the Canola Council of Canada is urging government action. However, entrenched political tensions suggest a swift resolution is unlikely. Factor number 5, steel and aluminum, Canada's industrial backbone at risk. The steel and aluminum sectors are another major casualty in this escalating trade war. Canada imposed a 25% tariff on Chinese steel and aluminum, citing concerns over unfair pricing and labor practices. While intended to protect domestic industries, the impact is already being felt across the economy. Steel and aluminum are crucial for sectors like construction, manufacturing, and automotive production. These tariffs are expected to raise costs for businesses reliant on these materials, which will likely pass on to consumers, driving up prices for goods such as vehicles and household appliances. With supply chains still strained from the COVID-19 pandemic, these tariffs could lead to delays, job cuts, and reduced production, hindering Canada's economic recovery and exacerbating inflationary pressures. Before we delve deeper, do us a favor and smash that like and subscribe button. This helps us reach more auto enthusiasts just like you. Now let's shift gears and steer towards our next point. Factor number 4, farmers on the front line. Agriculture takes a heavy hit. Canadian farmers are bearing the brunt of the trade war. China's targeting of canola may soon extend to other key agricultural exports like barley, pork, and wheat, potentially erasing billions in revenue. Agriculture is crucial to Canada's economy, especially in rural communities. Long-term trade restrictions with China, Canada's second-largest agricultural trading partner, could severely impact farmers and devastate rural economies. Farmers are calling for government intervention, but trade disputes rarely resolve quickly. Even if the conflict ends soon, it may take years for Canadian farmers to regain lost market share in China, leaving long-lasting economic scars on the agricultural sector and complicating future planning. Factor number 3, the consumer price shock. What lies ahead for Canadians? While agriculture and manufacturing dominate the headlines, the average Canadian consumer is also feeling the impact of this trade war. Tariffs on electric vehicles, steel, and aluminum are increasing production costs, which are passed on to consumers, leading to higher prices for everyday goods. Electric vehicles, already more expensive than gas-powered cars, are becoming less accessible, potentially hindering Canada's green energy goals. Beyond vehicles, The rising cost of steel and aluminum affects everything from canned food to household appliances. As inflation continues to rise, the cost of living for Canadians is set to increase, putting further pressure on household budgets. Without a resolution to this trade conflict, Canadians could face significant economic challenges in the months ahead. Factor number 2. Trudeau's high-stakes gamble: diplomacy versus economic blowback. Prime Minister Justin Trudeau is positioning Canada's tariffs as part of a broader strategy to hold China accountable for its labor and environmental practices. By taking this stand, Trudeau signals that Canada won't yield under economic pressure. However, this approach carries significant risks. Diplomatic relations between Canada and China have been strained since the 2018 arrest of Huawei's CFO, Meng Wanzhou, and the current trade dispute worsens the tension. Trudeau's strategy could provoke further retaliation from China, jeopardizing economic ties. Given that China is Canada's second-largest trading partner, losing access to this crucial market would severely impact Canada's economy. While Trudeau's firm stance may appeal to some, the long-term consequences of this trade war could be damaging both economically and diplomatically. Factor number 1. The ripple effect on global trade. What's at stake? This issue extends beyond Canada and China. It's a global concern. The trade war is sending shockwaves through international markets, particularly in agriculture and automotive manufacturing. Other nations are observing closely, as the outcome of this dispute could set a precedent for handling future trade conflicts. Europe, for instance, is already feeling the strain. China has initiated investigations into EU exports of pork, dairy, and brandy in retaliation for European restrictions on Chinese electric vehicles. This cycle of retaliation illustrates the fragility of international trade relationships and how swiftly tensions can escalate. Canada's efforts to diversify its trade relations through agreements like the Comprehensive and Progressive Agreement for Trans-Pacific Partnership underscore the urgency of reducing dependence on China. If these tensions remain unresolved, the risk of fragmented global trade alliances increases, potentially leaving Canada in a more vulnerable position. What's next? The future of Canada-China trade relations. As the trade war persists, both countries show little inclination to back down. Canada remains firm in its stance against perceived unfair trade practices, while China is equally resolute in defending its position. So, what's next? Both nations stand to lose significantly if this dispute continues. For Canada, losing access to China's vast consumer base would be a severe economic setback. Conversely, for China, the loss of a reliable source of agricultural imports like canola could disrupt its food supply chain. The Canadian government is exploring mediation and diplomatic talks to ease tensions, but the outcome remains uncertain. One thing is clear: the longer this trade war endures, the higher the stakes become for both economies. Ultimately, it may hinge on which nation can weather the economic storm better. Canada faces a pivotal choice: continue to play hardball or seek a compromise that might better secure its economic future. Are you concerned about the implications of this trade war for Canada and its relationship with China? Share your thoughts and experiences in the comments section below. Thank you for tuning in, and don't forget to subscribe to Piston Pundit for more updates on the automotive world and beyond. See you next time.